Um, Good afternoon, ladies and gentlemen, and welcome to this week's webinar where we look at the trading that we've done for this week and how markets are reacting. Obviously, it's been non-farm payroll day today, so there've been some numbers that have been coming out. We've seen some fairly dramatic moves in gold throughout the course of the day. I think we traded up as high as 2060. They're currently down at 2030, and have been a little bit lower than that during the course of the day as well. So fairly dramatic movements with this sell-off in this last period as well. So you can see on the daily chart there that we're looking at quite how dramatic that sell-off has been. But equally so, if we look back and we look at the rally that we've had from the previous highs here, going back to the early part of July, we've had a fairly significant movement there from about 1812 all the way up to where we are. And as you can see, just looking on this daily chart, there've been very few, if any, pullbacks and certainly no corrections within that particular period. So the start of the move that we've seen today could possibly be a more sizable correction than we've seen for about 6 or 7 weeks or so. So the rally from this point has been fairly dramatic. I think I've been on the wrong side of it most of the way up. And I'm sure we'll get some comments in from our gold expert at some time and see where we're going to go from here. Obviously, Goldman Sachs have been talking a good story through a lot of this period, probably from around here when they targeted 2000. It was probably a little bit earlier than here, probably here, where their analysts started to report that gold had a target level of 2000. And equally so as, and this is my belief, it's one of the things that you quite often see in financial markets, and you will have seen it with Bitcoin a number of years ago as well, that there is this fear of missing out. If everybody, you go to the supermarket, you go to the hairdressers, not that I go there a great deal, and people are talking about buying gold because gold is on this hugely successful run at the moment. Everybody starts to buy gold. Happened with Bitcoin. It's why Bitcoin rallied to 20,000 so many years ago and then fell away. So, and I don't like to wish anything bad on any particular market, but I'll make the exception for gold for the way it's treated me over the last few weeks. I do hope there's a fairly hard sell-off from this particular point. So we're at 2032 at the moment. The one thing that comes in to contradict or possibly reduce that sell-off is it is the weekend. Lots of people are going to be going through, or lots of investors are going to be going through their own assessment over the course of the next few hours, whether they're going to be risk on or risk off over the weekend. And obviously we started the day today with President Trump introducing some more executive powers, banning transactions with certain Chinese companies. So the potential for that US and Chinese discord over technology to ratchet up over the weekend is a very clear and present danger as far as I'm concerned. So my decision would be and is to be slightly risk off, which might mean that gold is supported a little bit ahead of the weekend. But we have been down, and we've been down to as low as 2026, I think, in this slide away. That we're probably a little bit lower. I think we went down to 2023. Whilst we've rallied a little bit from that point, it does still to seem to be weak. But as on cue, Stuart is sending me a message. So let me just have a quick look at that. So please, just in relation to questions, please keep them coming in. So Stuart has a channel on the gold weekly chart plotting the next target around 2350, 2360. His sense tells him that a pullback has to happen, and he's looking for a pullback to around 1990, then up to 2350. And like I said, Stuart's been more right than me with gold over the last period. Gold has treated me well for many a year, so I'm not going to knock it too much. But I wouldn't be. I think the last time that we rallied up to $1,800, and then pulled back all the way down to about, and this is just going. Well, we might as well look on the charts. So I probably need the monthly chart. So looking at a monthly chart here. So on the last rally, maybe it was probably longer ago than this, but there was a rally up to about 1,800 previously, and the pullback came all the way down to around the 1,100 level. I worry, and this is where I get a little bit controversial, is if we do pull back below 2,000 and start to correct quite considerably underneath it, it might be another 8 or 10 years before we see 2,000 again. That I suppose is what I'm hoping for. Let's see which way it pans out over the next period. Just in relation to the trading this week, there's the results so far. Very much a topsy-turvy week. Started out quite well on Monday. Again, as you can see, the losing trade, or the significant losing trade on Monday, was gold. A loss of 243 pips on that. Still a very small profit on the day. And then Tuesday and Wednesday were quite painful. A total loss of 464 points over those 2 days, and very much put me on the back foot for the week. The main losses again on Tuesday: gold and a Dow trade, so 2 gold trades and a Dow trade. On Wednesday it was Dow on its own that caused the losses. I was looking for a breakdown from that 27,000 level, but we were much stronger. I ran those positions overnight, and they closed out. They closed out late into the evening. I didn't actually run them overnight. Thursday morning, again, the negative feeling was compounded. The markets looked quite strong. I was short DAX and Dow futures, and it looked as if the market was going to run away with me above 27,100, but it did turn around, started to come back, and as you can see there, every trade on the day ultimately was profitable. But I guarantee you that wasn't the way that it felt first thing on Thursday morning. There was a fair amount of momentum in the market. We were pushing higher. Felt a bit like a short squeeze, and that the market could catapult from those areas. Very close to stopping out. That would have compounded my losses at that point, probably up to about the 750 pip level. But thankfully that I didn't pull the trigger. The market's turned around, and since that point, I have 1 trade open at the moment, but every trade bar 1 since that point has been profitable. So right now, as we talk, with 1 trade against me, and to be closed out this evening, I have 120 pips in the bank, and the turnaround from Thursday morning definitely feels like a win to me, because it didn't look particularly good first thing on Thursday morning. So I'm going to look at some of the things that I didn't do particularly well this week. I do encourage you to continue to send questions in, and I'll answer those as we go through the remainder of this session. As I've mentioned previously, we do have, part of trading is not only about making money, but it's about managing your position if it's not going particularly well for you. And that's definitely what happened during the course of this week. And as I've mentioned a couple of times on Telegram when we've been talking on there, you know, it's very much a case of taking some time away from the screens, number one, which is important every week. Number two, reducing the size of my trades. And as you can see on Wednesday and a little bit yesterday and today, reducing the number or the volume of trades that I was doing, as well as the size of the trades, and that does create a different framework for you to work in, and obviously it's worked this week. So as I said, we have a small profit at the moment, which thankfully keeps the trend of making money week on week. But you know, like I said, it also feels like a win for me at this particular point, because it did look so bad on Thursday. So the big numbers that were out today, non-farm payroll, the employment change came in at just over 1.75 million positive, so additions. The average hourly earnings were expected to come in down minus 0.5%. They actually came in at a positive number of 0.2%. And the unemployment rate, which was expected to fall from 11.1% down to 10.5%, went down to 10.2%. So all three of the numbers were positive. And obviously that led from 1:30 on this afternoon a fairly rapid jump in Dow futures up to about 27,320, I think, on the upside. And we're just going to have a look at that now and just talk a little bit about the trading that I did at that particular time. The trades have all worked out, thankfully. The DAX trade that I'm currently holding is about 82 pips against me, so can quite easily be catered for or offset against the profit that I'm currently showing. We'll obviously reduce the profit that we're currently showing, but there is enough there to give that trade a little bit more rope this afternoon and see if we fall away from the levels that we currently are. If we see some movement to the downside prior to the close this evening, I will more than likely run the trade over. I think with this trade discord that exists out there between Trump and the Chinese, I think there is some potential for a little bit of downside on Monday morning. So I'm not against holding that trade. It is the only trade that I have open at this particular time, and I'll be reasonably happy. If we rally from this point, I'll probably stop the trade out and go home for the weekend with no trades open. What I do want to look at, obviously the euro did fall away. I sold the euro just before the non-farm payroll numbers came out. We did have a bit of a drop to the downside, took a small bit of profit out of that, but the real movement has happened after the opening of the markets in the US. We have fallen below 118. We've been a little bit lower than we're currently showing, but there was a rally prior to the drop that we've seen taking the markets below 118. So I think it rallied almost up to about 118.40 before latterly it's fallen away down to 117.85 where it currently sits. So I'm just going to open the Dow chart here. If there are more questions, continue to send those in. It may well be that everybody's out in their garden enjoying the sun and isn't locked inside like me, talking to a screen that you're all going to watch later in the comfort of your own homes when the sun has disappeared. But here on the charts, what you can see around 1:30 is that rally. So pretty much the same way that for those of you who've known me a little bit longer, it's very rare that I trade a number. What I prefer to do is to wait for the number to come out, wait for the reaction, which we see here. Now this is a minute chart that we're looking at the moment, so the movements look a little bit more extreme But wait for the movement to happen, which there we see a rally up to 27,315. Let the movement finish. Look for any form of confirmation that we're seeing a change in direction, and then trade. Now I did that today when I sold at 27,302, and took 40 or 50 of pips out of the trade as we dropped away here. What I did today, which is the thing that I did wrong, is I took a trade out here, around here at 27,146. I took another one out just before. I took another trade out just before before the numbers came, around 27,189. Into the trades too early. It was pre-market move, and it just reconfirmed for me that I should be waiting for the market move before I then decide on market direction. So here we have the market move. You need to wait a bit of time. It's like around the market open, the orders that we're putting in them around the market open. You want to look for that 5 to 10 minute phase for the market to really consume all of the data, the detail, make its move, and then see where its genuine movement is. And the genuine movement, I would say, here has been to the downside. Now, in that move to the downside, it's enabled me to take out all of the positions that I did have on during the course of the day. But the error on my part today was being too early into the trade, pre-number. Now, why did I take that trade? I think the ADP numbers disappointed a little bit this week. They were positive, and I was expecting the numbers today to be positive, but to miss the expected numbers. So for average hourly earnings to be a little bit lower, unemployment number maybe not to hit that 10.5 level, and the jobs that were added to be lower than the target number. The fact is that we exceeded all three of them, so I was wrong on every count, and that's why we saw that rally to the upside. But thankfully, during the course of the day, again, managing the position out from where we'd got to. There are a few questions here, and I only have 3 minutes or so to go, so I'll answer a few of these. So one of the questions coming from Peter is, there no basis to buy just before the opening bell to get the bounce? Absolutely, Peter. If that's the way you think the market's going to go, my experience is that, and I think I've mentioned this previously when we've been talking about this, is that the trading during the European zone in relation to the Dow, more often than not, so more than 50% of the time, and I'm not going to give you an exact number, but I would suggest it's probably 7 times out of 10, the market overreacts, and that's why we get that initial pullback as the stocks start to open, and we get what I describe as a genuine level for the futures. Now, if you look at yesterday's trade and you look at today's trade, I had somebody live on with me when I was doing yesterday's trade. They both would have, and they both would have returned. I think the TPs that I had in on both were around 26 pips. If that had been set at 20, both trades would have been closed out within a minute of the market's opening, and then we've had that move higher. So, you know, it's I'm not going to give you a statistical number here, but I think probably 7 or 8 times out of 10. So that's a ballpark number as opposed to something really scientific. I think the European markets overreact in relation to Dow futures, and that's why we get that initial pullback. As volatility was a little bit higher a few weeks ago, we could take or the take profit levels were a little bit wider, and you could take more money out of those. Everything being a bit tighter now, we're having to reduce those, and like I said, over the last 2 days I've set the take profit level at 26 points, and I think it's gone down to about 20, and I haven't been able to take the profit at that point. It's been later in the day that I've been able to do that. So again, I'm not sure whose question this is. The and the dollar index, the dollar is under a lot of pressure, and that is one of the reasons why gold is rallying. And on a broader basis, with all of the money that's being added to, or with all the banknotes that are being printed by way of stimulus, there is going to be inflation at some point in the future, unless the Fed and the other central banks do a marvellous job of guarding against that. But it is going to occur, and those are the main reasons, or some of the main reasons, why gold is rallying quite as hard as it is. And I think equally so, as I mentioned, with some of the research and analysis is out there, everybody is on the gold train at the moment, and at some point that will turn around, and we will see a correction as opposed to a pullback. We haven't really seen either over the last 6 or 7 weeks, and when it does happen, it could be quite severe. So the gold index is something to watch in relation to that, and it is under a lot of pressure. It's not something that you trade. It was always deemed more of a hedging instrument than anything else, but extremely volatile, and so not something that I recommend you get involved in. But as a barometer for how the dollar is performing, it's more broad based than just gold on its own. But obviously it is counter-indicative in terms of how gold is performing at this time. So look, we've run over a little bit there. If you have any more questions, send them through, and I'll do my best to answer them over the course of the weekend. And it's my turn to head off to the sun now. We have the one position open, which is a DAX trade. And I will update you prior to 9 p.m. this evening about what I intend to do with that. Thank you very much for joining me.